Welcome back to Infinite Investors, the home for all new and non-investors. I'm Curtis, and today we've got another portfolio update for you, and I'm going to be talking about a lot of things this week. People. We got a lot to get into. So we're going to be talking about £95 in dividends that I've made this week. We're going to be talking about a $5,128 profit that I've made in a day trade this week, and I'm going to give you my thoughts on the equities, the securities that I day traded in terms of long-term investment opportunities. We're going to be talking about more activity for my 2020 vision. I can see clearly now. The rain has gone. The rain has gone for 2019. Listen, I'm telling you, my portfolio is going to start to take the shape that I actually want it to take. I can see a lot more clearly now. I've sold 2 more stocks this week. I've bought another stock this week. That's all part of the 2020 vision. Listen, I don't care if you don't like my singing, yeah? I'm not trying to be a singer. I'm trying to buy stocks, okay? I want stocks. And last but not least, we're going to be telling you, I'm going to be telling you, because I'm not more than one person, I'm going to be telling you that I believe the UK is avoiding a recession, and I'm going to give you my reasons why. Now, it hasn't been guaranteed, not until 9:30 on Monday the 11th will we find out whether or not we get into a recession or not. However, I'm not wrong. We're not going to go into a recession, and I'm going to give you my reasons why. So if you want to know more, please like, please comment, please subscribe. Help the channel get to 2,500 subscribers and get the world of investing out to more people in a clear, simple, and transparent manner. But first, let's get into the dividends. £95 in dividends I've made this week. The first dividend was Verizon, and I made £4.4p in Verizon. So you can see here, free trade has now got this lovely, oh, you can't tap it, say no more, but you can see right at the top here, Verizon, £4.4. Dividends are now in the activity feed. I think that's a beautiful and well needed and well awaited feature. So thank you to Free Trade team for actually making it happen, because it's really nice to just see your dividends come through here as part of your activity feed. But yeah, Verizon, £4.4, which is great. The next dividend that I received was Barrett at £62.19. And listen, I only thought it was going to be around 50 to 60, so you know, I never expected it 62.19. It wasn't something that I thought was going to happen. I thought it was going to be about £50, so I don't know if they upped it at the last minute. I need to go back and check that. Actually, I don't really care. They upped it in the right direction, but I thought it was going to be about £50 or 40 to £50. I couldn't remember, because I knew that I'd done a video before saying that my November dividends is going to be total £75, and I've still got 2 more dividends to come. So thank you, Barrett, for nicing me like that. And then the last dividend payment, which you can see at the top here, is Taylor Gang, and they gave me £29.79. That's my highest yielding dividend stock. So you know, that is, you know, really good. So now I've got 2 more that I'm expecting this month rather. And the first of which is JP Morgan Emerging Funds. So they're going to give me around a 99p dividend, you know what I mean? Some penny sweet thing in it, just some small little, don't worry, them dividends are good though. You need them dividends. And then the last one that I'm going to get is from British Land. And I'm expecting a dividend payment of British Land that's going to hit the activity feed somewhere what is this? Free trade. Hey, they rejected it. I never expected it. Why are they rejecting it? Anyway, £4.55 I'm expecting from British Land, which is going to complete my November and complete my 2019 dividends, to be fair, which is good. So moving on, day trading. So this week, what I traded was Uber. I decided to trade, and beautiful, look at that, look at the way it's gone down, lovely. I shorted Uber this week. I produced a video. First of all, just to be clear, for those of you guys that haven't seen it, what I did first is produce a video to tell you what stock that I'm going to trade and how I'm going to trade it, and then I produced a video post the trade to tell you the performance of the trade, and obviously letting you know the results. And obviously, as I mentioned in this video, I made 5k short in Uber's lockup period. Now, I could have and should have probably done earnings, but I felt that that was a bit more of a gamble. And you know what? I'm not mad at that. Sometimes you can't enter every single trade or every single investment. Let somebody else make their money off earnings fall in. Like you can't be involved in everything. Do you know what I mean? Like you can't worry about, okay, I should have done that, or other people have made so much money trading the earnings. Why didn't I trade the earnings? Because these are some of the comments that I'm getting, and I'm just like, listen, you can't worry about what somebody else is doing, and it's just forget about it. Do you know what I mean? Let me put it into context. Like, have you ever been in bed, like, and you just wake up in the middle of the night, or you've just gone to bed, and you're just thinking, someone somewhere, like not over the rainbow, no Dorothy, but someone somewhere, yeah, is like just making sweet love to somebody else, and you're just sitting there on your Jack Jones, with your long johns, just worried about sentiment stocks. Like, is it just me? Is it me? If it's just me, then you lot are liars. I don't care. You lot are liars, because sometimes when stocks go down like 0.01%, you guys are in my DMs at like 3 in the morning talking about what's my thoughts about a stock that's dropped 0.01%. I'm like, yo, just relax. Like, it's only 0.01%. Anyway, the point I'm basically making is, just because someone across the world is making love and you're not making love right now, you can't be worried about that. The same way that somebody else is trading a stock or trading an earnings update or trading this thing and they're making money from it, you can't be worried about it. Me personally, I'm a selective trader. I only trade the things that give me a very, very high level of confidence that I'm going to earn some money from it. If I don't earn money, that's fine. But I've got like an 80-20 rule, and I need to be 80% certain that I feel like it's going to work. And if it doesn't work, then that's fine. It falls into the 20%. And I even showed you guys that my profitable ratio this year is 85%. So it goes into what I'm basically saying. Because I lost so much money when I first started trading, I had to change my whole trading philosophy. I had a 2019 vision, the same way I'm having a 2020 vision for free trade. It's like you have to change up and work it all out. And just look at like the Shopify situation. So you guys know that I invested in Shopify, but I tried to be smart and be slick and buy it before the earnings, which I felt was the right thing to do, because this is what happened. 8 quarters of beating estimates, and I bought before the 9th quarter estimates, expecting it just to be positive, as all the other ones have been positive, and then here I come, enter the trade, and it's negative. Like, fam, like, it's sometimes you just can't be involved in everything. So me personally, I entered the Uber trade only for the lockup. I did miss out on money with the earnings, but I'm absolutely, like, really not worried about it in the absolute slightest. Like, it doesn't bother me. And I will say, you guys, a lot of you guys now have sort of, your interest in trading has been slightly piqued from the Beyond Meat situation. And I'll put a disclaimer out again. I think it's very risky business. I think you guys need to really decide whether it's something you actually want to do or be involved in. I don't mind showing you, because I was a trader before I became an investor. I've only started investing in free trade, back in 2018 December. And so when I saw the opportunity, I thought, you know what, I'm going to put it out there. But at the end of the day, it's not investing from my personal perspective, and you guys need to really consider whether or not it's something you actually want to be involved in. So I actually don't think I'm going to put up too many more trading videos, because I still want to keep the channel focused on investing. But because it happened this week, I thought, you know what, as part of this week's update, I'm going to let you know what's happened. So in terms of the 2020 vision, I can see clearly now. The rain has gone. Last week we spoke about the fact that I sold Robo Global, and I sold, where are they? I sold Trig, Renewables Infrastructure, and I bought Shopify. Obviously, albeit I bought it at before earnings, trying to be slick, but I still bought Shopify. I still think, believe in it in terms of my long term. This week, I think you probably saw it before when I was looking at the dividends. I have sold, the first one I have sold is Verizon. I've sold Verizon. Now, with the other ones that I've sold, a lot of the time I've told you that fundamentally I don't think there's anything wrong with the stock and blah, 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 blah. It just doesn't fit part of my strategy. Verizon somewhat fits that, but there is something that I'm personally tweaking, which I don't really know what category to put this in terms of if there's something wrong with the stock or if it's just me. But I think, me personally, I don't know about investing in American dividend stocks, because for me, there's two issues. One, the withdrawing tax, like I just think you just net a less amount just than you should have really netted personally. And I've noticed that with a lot of these American stocks that I was getting dividends from Verizon and Chevron, like it's just not as beneficial as the dividends that I'm getting from the UK stocks. And I don't think the UK stocks are fundamentally better then. So for me, what is the reason? And I think the withholding tax must be a reason why it feels like actually I earn more from a lot of the UK dividend stocks. So when it comes to dividends now, I'm really going to be focusing on UK companies and REITs. And REITs can be from anywhere in the world, but I think those are the two things that I'm going to focus on in terms of building my personal dividends setup. And unless this is some absolutely stupendous American company that I really want to get in, then obviously I will do that. But I think in the main, 80%, 90% is probably going to be made up of UK stocks and REITs personally. And the second thing, for me, the growth of Verizon was very limited. Now, I need to really go back and look at whether it was the dollar cost averaging strategy or whether there was issues with Verizon. I know they got a high level of debt. Obviously, I know there's a lot of stiff competition in the 5G market in the US, even though Verizon were meant to be the front runners, and that's the reason why I invested. But I've just never really seen the benefit. Now, it could be premature, but for me personally, the opportunity cost of putting that money into a growth stock is greater than the value of me sticking with the Verizon stock. So I personally would rather just cut now. Obviously, again, with both with Verizon and the other stock that I'm going to talk to you about, I made a very, very small profit because I'm not going to sell at a loss. And then obviously I reinvested that money. But yeah, if you look at it over the course of the year, like for me, look, 1.85% over the course of the year, like it's just a joke thing. Like I just don't care for that. Like I just genuinely don't care for 1.85% over the course of the year, me personally, and just getting these quarterly £3, £2, £1, and then £4 dividend just because I've now invested a lot more money. So like it could be the stock. You could say it's the stock. You could say it's my strategy. Maybe I'm leaning towards that it's just a stock that I just don't like anymore, and so I'm just going to be real about it. That's just how I feel about Verizon, and that's the reason why I decided to to sell Verizon. Now, the second stock that I sold, like, listen, this stock for me, MSCI China, ticker symbol HMCH, Humachurch. Oh, it's just a dead stock, bro. Like I'm not even gonna lie to you. That stock, yeah. Let me just get it up and put it up on the screen. That stock for me is arguably the worst stock I have ever bought. Like it's just the worst stock I've ever bought, because you know what, yeah, it's just so crap, fam. I don't care that it's gone up 14.93%. Bearing in mind, I never got it in at the beginning of the year, and to be honest, the movement has pretty much always been down or in the wrong direction for me. It's just a dead stock. But you know what? It's my fault because I invested into this for the wrong reasons. First of all, like there was all of this sometimes, you know what, you can read too much. You can actually read too much. So I'm reading stuff online and I'm reading different articles from different analysts, and I'm reading different different theories from people, and then I'm hearing, oh, you need exposure to China, you need exposure to different countries, you need to diversify, you need to do this, I don't need exposure to China. I don't need it, fam. Like sometimes you could over-absorb information from the market, and for me personally, yeah, I didn't need exposure into China. I need to find stocks that fit with my strategy, that achieve my objectives. If Chinese stocks or the Chinese market is a part of that, great, then you need to do that. But I kind of, being an early investor, just thought, oh, if the market and people that have been in the market for 10, 15, 20 years saying you need some exposure to China, you need to diversify, okay, go buy China, go buy a Chinese fund, then I forced the issue. Do you know what I mean? I forced it. And for me personally, it's just pathetic. Secondly, like this stock specifically, this actual one, when I did my research on Chinese stocks, you can go and check the video when I actually bought this stock. Please go and check it out just so you know that I'm not lying. I said to you in that video that there was so much research of all of these other ETFs about China that was actually better performing ones. This one wasn't even featured. However, because Free Trade only had this one, I felt, and this is my own issue, kind of compelled to go and buy this one just because it was the only available one on Free Trade that I could get. And that's a dickhead thing. That's so dumb. That's so dumb retrospectively when I look at it. That because it was the only one available and people said I need to invest in China, even though there was other better funds, I go and force the issue and go and buy this one, even though I really didn't, believe in it specifically this much. And I don't understand, man. What is Humachuch, man? What actually is this? Like, it sounds like some Croatian footballer. Oh, it's Humachuch. Like, I don't know. This stock for me is just one of the worst things I've ever. It comes like some tangy sorts. Can I get a bit of Humachuch on the side? Like, I don't even know why I bought this. Like, I genuinely don't know why I bought it. I barely invested into it, as you can see. Like, after I bought it, it just was barely ever in the green. I don't even know if this 14.93% is accurate. It must be. But to be honest, I actually got it around when was the first date? 3rd of September, right? Oh no, let's see. Or maybe I bought it earlier. I got it around the 2nd of July, right? So if we go and use the scrubber, where was the 2nd of July? So I bought it around here. Do you know what I mean? I bought it around its peak. So as you can see, just from this, I bought it from the 2nd of July, and you can see on the scrub on your screen, that's probably where I bought it from. And for me personally, it never went higher than this, actually, you can see. And so that's probably why from when I invested, it was a terrible stock and opportunity. Obviously you got the trade war situation other than that, but to be honest, it just for me wasn't worthwhile. And I don't know about you, but every time I used to even look at this stock in my portfolio, I used to just be like, you actually just disgust me. Like, why do I actually have you in my portfolio? Do you know what I mean? And for me, there's just 3 key things I want you guys to take away from my own learnings and my own experience, right? And number 1 is don't invest in everything just because people tell you to do so. Like, invest in things because you have a specific goal and you need to find the stocks that's going to help you fulfill that goal. That should be the primary reason, right? Number 2, and you lot are going to hate me for this, but I'm prepared for it. I think diversification is a myth. Like, I think that I believe in potentially diversifying by sector, and I believe in like things like the S&P 500 and index funds as a way to diversify. But I don't believe that, oh, you know what, you need to have exposure to this specific region, which was what I was basically gleaning at the time when I actually bought this, that, you better have exposure into China, you better have exposure into emerging markets, you need to have exposure into, I personally don't believe you need to have exposure into any region. You have to expose yourself into whatever it is you think is going to help you achieve your goals, and let that be the primary driver and the primary factor. And the third lesson, which is the biggest out of the other 2, the biggest out of all 3 that I'm basically illustrating to you, is do not buy something just because it's available on the platform you use. I think that was the most sneakiest thing that I've ever done in my life. Like, I don't know why I would ever do that, to be honest. It goes against everything I believe in. I believe in fundamentals. I believe in looking and researching and making sure you're happy with the stock and the investment. I've done that for every single other one. This one, for some strange reason, I lost, the way I like to approach things, and I decided to, read articles, sort of be influenced, and then just go buy the first thing or the only thing that's available that's going to give me exposure into China. Like, I don't need to if I want to get exposed into China, I'll fly to China. Do you see where I'm coming from? I don't need this fund. Humachuch ain't helped me one bit whatsoever. So that's my key takeaways for you personally. Like, don't force yourself to buy stocks that you don't really know much about, or you don't feel like it's a great stock. Actually, I knew about this stock. That's a lie. I actually knew about it, but it wasn't beneficial versus some of the other ones that I actually saw at the time that I was looking to do. It just happened to be the only one available on free trade, and at the time I was only planning to ever invest in free trade. I'm not going to go open another brokerage account just for one ETF. That's just, it makes no sense. So that's my key learnings, and then hopefully that can benefit someone out there that's thinking about, reading an article and then going and jumping headfirst into buying something. Now let's get on to my 2020 vision. I can see clearly now. The rain has... I'm going to do that every single time I say 2020 vision, because I'm seeing clearly. And as you guys probably saw in the activity feed, I've bought advanced micro dev. That has now been added to my 2020 vision. So let me give you some key reasons why I bought advanced micro devs. Obviously, Actually, let me not start with that. The first one I'm going to start with is that I think the CEO is great. One thing I look for, especially when it comes to and pertains to growth stocks. So now, when I showed you my investment criteria, my investment strategy for me being a value investor before, obviously, if I'm buying stocks that are not value stocks, I need a slightly different criteria, right? The same metrics are not going to be the ones that I can use in order to make an effective and sensible decision in buying certain growth stocks, right? I can't be looking at, oh, it's undervalued by X%, so that makes it a good growth stock. That's not going to be the same thing. I need to look at other factors. And so one of the factors I've chosen to look at is the CEO, because I personally believe specifically for growth stocks, you need someone that's at the helm of a company, that's got a great track record, that's really able to turn a company around, that's demonstrated capabilities that shows that the company is going to be profitable, that's going to drive growth. And I think the CEO for AMD is great. She's done a phenomenal job in turning the company around since 2014, since she's arrived, and you can obviously see, some of the growth, in the last 5 years and whatnot. I think she joined in 2014, actually. Let me just double check. I think it was 2014 she joined, and she's just done a phenomenal job. And I think what she's like, her charisma and what she's sort of planning for the future for me is like Elon Musk-esque. Like, she's no Elon Musk, obviously, but what I'm basically trying to illustrate is that she has taken it by the reins, and I believe in what she's going to try and do for the future. So for me, that was one really, really important factor. The second factor is that I think that AMD is doing a very great job into eating into Intel's market share. Also, maybe a slice of Nvidia, but that's obviously not as much. As Nvidia dominates the whole GPU CPU market, whereas Intel, the whole microprocessing market, I think AMD is genuinely eating into that market. And I think they're the sort of problem child, they're the disruptor for Intel. They're creating some of these products, some of these chips that are smaller in size, have better capacity, that Intel, with all of their years of experience, haven't been able to do. And for me, I just like that as a potential sign. I think they've got good prospects. I really like the technology, and as I said, Intel's not seeming to be able to replicate that. They've had a great earnings, and you can say, okay, so you bought after the earnings, so have you not bought at too high a price? Should you wait until it corrects? It might correct, but when I'm looking at it as a 1, 2, 3 year growth stock, in my mind, I'm not worried about a 10% correction that happens now. Shopify has already corrected 10%. All I'm going to do is, when I have a bigger lump sum, because I'm not dollar cost averaging these stocks, I'm just going to put lump sums in when it dips. Then I'll just add more when it dips. Do you know what I mean? And I'll add more than what I've invested now in order to obviously, take advantage and benefit from a lower average price. So that's all I'm really going to do. I might buy into these stocks once, twice, 3 times, maybe maximum 4 times a year. You won't see me buying into these stocks every month or every week, because that's not how I want to approach growth stocks. I want to just put some money in there, let it run, and have a good performance for it. So that's one of the reasons. In terms of their balance sheet, their debt has been reducing for the past 5 years. It's still at a level which I think is ideally not where I would typically want it to be, but because I see that their net worth is increasing and their debt is decreasing, that for me is a great sign. They're forecasted to have 61% growth, which the key factor for me is that figure is based off 35 analysts. Listen, a lot of the stocks that I've got on my current portfolio, I've like, say, invested in something that's going to have 15% growth based off 3 analysts, based off 6 analysts, based off 2, based off 7, based off 10. Like, I think the maximum has been like 10. To see something based off 35 analysts, for me, saying 61%, oh cool, they're not all going to be wrong. It might be 50%, it might be 80%, right? But if it's going to be 61% annual growth based off 35 analysts, it gives me a lot of confidence that actually there's still a lot more growth to come, with this company. Now, they don't pay a dividend, and they're technically overvalued. And for me, listen to what I'm saying, those are 2 reasons why I'm investing in this stock. Because one, they're growth stocks, and growth stocks by nature, for me, shouldn't be stocks that pay a dividend. All of the extra capital that they should have should be reinvested back into the business for them to launch new products, new services, new business lines, new models, new etc, in order to generate more growth for the stock. So I'm perfectly fine that they're not paying a dividend, and I see that as a selling point. Secondly, they are technically overvalued, and you know what? A lot of the stocks that I've bought this year, I've bought them because they are undervalued. And you know what? When I look at my profit and my performance and my P&L for this year, I'm still in profit, but it's so conservative, and I think a lot of that is because I'm buying really, really safe, conservative stocks that are undervalued. Now, I want stocks with a bit more growth potential. So when I look at my beta volatility, right now, AMD is at the complete highest volatility end of the spectrum. But I'm fine with that. I'm fine with that because, to be honest, most of my stocks are towards the lower end. I'm still below the market average in terms of volatility, so my portfolio still isn't a high risk portfolio, and I just believe AMD is going to grow. So, you know, I'm going to do a video. Someone asked me, can you do a video on your 2020 vision? Absolutely. I'm still formulating it. I think it's 60% there. I know roughly what direction I want to go in. I'm still formulating it, but I will do a video on my 2020 vision that's dedicated, just so you guys can know this is what my strategy is for the year, going up front. And obviously I'm going to stick with it for the whole of 2020 because I can see clearly now. The rain has gone, and you know what? I think there's more to come. There's more to come. So yeah, just look out for that. You know, the funny thing is, I haven't beat my own earnings estimates, you know, this year. How about that? And for me personally, when you look at, you know, your performance retrospectively, because I always look at it retrospectively on a monthly basis, weekly basis, yearly basis, whatever it is, like, you have your goals that you set out to achieve, right? And if you don't achieve it, you need to figure out what is it that's caused you to not achieve those goals. Same way that if Microsoft doesn't have its earnings, doesn't beat its earnings, or Apple doesn't beat its earnings, they need to figure out what is the reason. And they normally tell you, oh, we had this bill, or we had this debt, or there was this legislation. They'll find the reason why they didn't hit their earnings. And I'm doing the exact same thing for my portfolio. I'm trying to find the reason why I didn't hit the goal that I set out to achieve. And I might be wrong, I might be right, whatever it is, but I will find the reason. So, you know, my advice to you guys is that you guys need to be the CEO of your portfolio. You guys need to think of yourself, like I say, as a business, as an institution. You are the CEO of your fund, and if it's not performing in the way you don't like it, the way it's not performing, then you need to take some action, and you need to figure out why is the reason, why is it not performing a specific way, and what can I do to go and change that. Because I think a lot of people have done mistakes that I've made, which is just buy because someone else has bought it, buy because you think someone else thinks it's good, so it must be good. You know, buy for reasons that's not, that you're not then accountable for actually why you've bought. And really and truly, you should be accountable for all your decisions. So figure out what's going wrong, if it is going wrong, and then obviously make the necessary steps to adjust and correct that. Now, moving on to the recession. What am I going to put on the screen for a recession? Because we're not going into one, I'll tell you that. So I'm going to put Barclays on the screen. I don't know. I always put Barclays on the screen for a recession talk. We are not going into a recession. Yeah, listen. In terms of recession, right, we're not going into one. And the reason why, I tell man that for a fact, the reason why we're not going into one is for two reasons. So about 2 or 3 videos ago, I basically told you that in the last 3 months, the economy grew by 0.3% as weak manufacturing was offset. Cardi B Offset was offset by buoyant TV and film production, and I referred to Love Island being the reason. That's childish. I referred to Love Island being the reason. So that was about 2 or 3 videos ago, right? And they basically said in that article from the BBC that basically we have to have a really bad performance, I believe, in September for us to go into a recession. That's reason number one. And so obviously I didn't believe that we're going to have a really super bad performance, and we can see that. I think the market sentiment for the past month has actually been pretty decent, you know, with all of the trade war stuff, with all of the Brexit stuff. I think there's been a lot of positive sentiment in the market. So, you know, I personally believe that we haven't had a bad, so that's kind of, you know, fed into the whole theory that, you know, we're not going into a recession. The second reason why I don't believe we're going into a recession is that I'm reading this from The Guardian. There was a Q&A with Mark Carney. If you don't know who Mark Carney is, he is the top man in the Bank of England. And basically, he said that he predicts growth of 0.4% for Q3 2019. And then the article basically said, we'll find out if he's right on Monday at 9:30 a.m. when the latest GDP figures are released. Listen, what kind of... If he's saying with his chest, I predict a growth of 0.4%, like he's actually given an actual figure. And for me personally, he's the top man in the Bank of England. I don't think he's ever going to come out and say, I predict a growth of this specific figure, and then we're gonna all find out on Monday if he doesn't know something. I believe I believe he knows, and that's why I believe he can confidently say, with a bit of confidence, this is my prediction. Because if he was just absolutely wrong, and then we actually went into a recession, he would look crazy. Like, to me, he would look so mad for even, because he didn't have to even say that statement. He could say, "Oh, Mark Carney, what's your predictions on the recession? If we're gonna go into recession, or we've had some buoyant film and TV production. That came out last month. We found that out, but it's really difficult to say. We're gonna find out on Monday. I'm not really too sure." Like, he can easily dodge it and say that he's not too sure. The fact that he's saying that he thinks it's going to be a 0.4% growth, for me personally, is an indication that we're not going to go into a recession. So I'm saying with my chest, we're not going to go into a recession on Monday. If I'm wrong, I'm wrong. It is what it is. But I think we're not going to a recession. And so what I basically predict next week is that there's going to be a lot of positive sentiment in a lot of your UK stocks, particularly financial institutions. Probably the reason why I put Barclays on the screen. So hopefully you guys should see a decent level of growth in your UK stocks next week, because hopefully we should be announcing that we're not going to be going into a recession. So for me, that's basically my prediction. Now, in terms of next week, obviously we'll see what's going to happen. There's more stocks for me to buy. I've got more stocks I need to buy, and I've got more stocks I need to sell. It's really not over. I've still got more that they need to get out of here. They need to go. They just need to go. They're not part of the vision, and so obviously that is going to become a little bit clearer. Hopefully I'll be able to sell them. I try not to sell stocks at a loss. I'd rather average it down, personally speaking, and the maximum loss I'll sell at is some like what JP Morgan is right now, 0.91%. Like, if I was to sell this fund, basically, because I don't care about losing £2.36, right? But other than that, if it's like a bigger, like 9%, let's say I wanted to sell Snap, and Snap isn't part of it, by the way, but let's say I did want to sell Snap, I'm not selling at 10%. I just personally, I don't care how much I've invested. That's just not something I'm doing. So I would rather wait it out. But listen, thank you guys for listening. Thank you for listening. It's been real. It's been fun. I want to thank you guys for watching all of the videos this week. The engagement rate for the channel this week has been astronomical, much higher than it's been on previous weeks as well. So thank you guys for supporting the channel, for commenting, for liking, for sharing, for doing all of that good stuff. Really, really appreciate that. If you want to find out the next stock that I'm day trading, I'm not going to make a video on it, but I will announce it in our Discord community, so the link will be in the description. Go and check that out. I will let you guys know what next stock I'm day trading this week, and my reasons why, or similar reasons, to be honest, but there's some other factors as well. Have a fantastic weekend. Have a really, really good weekend, and I will catch you next time with another investment video. Bye bye for now.